Greetings, members one and all of the Salivation Nation. All the markets, even gold, are about to crash, says this investor who is going to put all his money into cash. Hey, that rhymes. Let's explore. That's right, this comes to us from Kitco, and this is quite something. I mean, one thing about Kitco is they do show different sides. They are technically a dealer and they're precious metals enthusiasts, but nonetheless, this is a time when people would essentially, when you see an article like this, some might be tempted to sell their gold and silver. And actually, that's what happened in March in electronic markets. That's precisely what happened. They sold their silver and gold and went into the safety of cash. That's right. Markets will see a major correction soon, most likely before the presidential election, said Clem Chambers of Investors Hub, who has allocated all his holdings into cash. I got a warning from the market about 10 days ago, he says in this interview. I watched part of it, and it's quite interesting. He says, so he cleared the decks because I think it's highly likely, not absolutely certain, but too likely to be in the markets that we're going to be in for a crash. This is what he told Kitco News. Normally, before a crash, I experience what I call a market malfunction, where my portfolio just doesn't behave as it should. Chambers added that he has a 65 to 70% certainty of a market sell-off of over 25% happening in the coming weeks, sort of like what we saw back in March. And under such conditions, it's best not to be long in particular equities. So he is giving a percentage of the certainty that it will happen. It'll be very fascinating to see if it really does. And heck, if he's right, you sell some gold and silver now, and then and when it falls, you take that and put it right back into it again. But what will the premiums be? It may not do much good. Me, I'm just holding on. These kind of moves, especially with the premiums and what premiums you're going to get back and what you were to sell, it's a risky venture. And seeing that I'm in the physical and not in the electronic markets, it's really not going to be worth it for those of us. But if you're in those markets, it might be worth looking into. This guy gives this prediction. We shall see if it comes true. He gives himself essentially up to 30% chance or 35% chance that he could be wrong. He likens it to a piano falling out of a window. You just don't want to be under it. Well, if you're in the market, any of the market, that's a pretty big piano, I would say. Under such a flash crash scenario, most assets have a positive cross correlation and tend to fall together. That's exactly what happened in March. When it does occur, there will be so many margin calls that pretty much all assets are going to get smacked, just as they did in the crash earlier in the year. Gold got smacked. Crypto got smacked. It all got smacked because when the market crashes, it's the people that get the margin calls and get the causes the knock-on vicious cycle, he said. Under normal market scenarios where a major market sell-off is not expected, Chambers would recommend an equal allocation of 33% cash, 33% stocks, and 33% gold in cryptos. All right, so there you go. On the economy, the full effects of the pandemic have not yet been felt, and the increased money supply from quantitative easing is going to drive up prices and create inflation. And I will say this, he mentioned in the interview that during the last SmackDown, and really maybe that might be a better word than crash, and it was kind of just a smackdown of all the entities. Gold and cryptos, they bounced back, and silver bounced back fairly quickly after that, and probably that will happen again here. He also talks about, when we talk about quantitative easing, what made that different in the past is quantitative easing filled the holes within the banking and the markets. But this time, the relief packages are more geared more towards the actual general economy. In other words, people, and going into for PPE, for relief, going in for hospitals and education and all sorts of different areas. And that is going to be creating more money than the actual supply of work to cover it, and that type of thing. So when you have that kind of scenario, it is ripe for inflation, maybe even hyperinflation. We've got massive deficit situation where governments can't afford their budgets. That's an absolutely textbook example that creates hyperinflation, let alone inflation. Chambers talks about. He says, so when governments can't cover their budgets, they just print money. We're seeing the beginnings of that, not the end. Of course, they've been really stopped quantitative easing really since the third round has slowed down. It's just amped up big time for QE4 to infinity here. Very, very interesting indeed. And let's see where the prices are for gold and silver. Here, as the recording of this video, everything is up a bit, and they're climbing up, and not a whole lot, but almost a percentage point for gold from the previous day. It's getting close to $1,900 an ounce again. Silver is up $24.30, so it's taken a pretty big climb upwards past that $24 mark, up over 2%. Platinum and palladium are both up, with palladium performing better at a 2.21%. Silver is the winner of the day, though, here, as it is in the percentage realm, which leaves us with a gold to silver ratio at under 80, but above 75, 78.4. So there it is. That's just it. Silver is one of those, is the most volatile, I believe, of the precious metals here today, as far as, between gold and silver. Really, there's only two. I'd say probably the volatility we're seeing is with palladium is pretty strong, maybe even platinum. But make no mistake, maybe the most stable of the precious metals, as I've mentioned before, is gold here. It is very stable, but it has been moving in erratic ways too over the past weeks and months. But it is holding its own for sure, nearing record territory again as it begins to make that climb up to $1,900 again. It's been quite a wild ride for the metals, but in times where, especially when you hear news that they may crash, if you're holding the physical, it may not be the time to sell, but right now, anyways, because it hasn't happened yet, and some of these premiums that dealers are paying back, I don't know if they're still paying $4 per Silver Eagle these days, and I'm sure much less for generic. But in the physical markets, when you're kind of tied to a physical asset that you hold in your hand, it does say something about liquidity. It's not quite as easy to liquidate. I mean, obviously, Eagles are the easiest, but the best liquidation is in a digital realm. And I think that's probably part of what makes cryptocurrency so attractive, and things like SLV and GLD, is their liquidity. But I believe that holding the physical provides a level of security and safety that you won't find in these electronic markets. You don't hold it, you don't own it. There's something to be said for that. And it also disciplines you to not just willy-nilly go out and sell. Now, some people do it, but you're more likely to be careful about that, especially for keeping track of what you paid for a certain precious metals item. If you're paying a certain level over spot today, and let's take a look at some numbers here. Let's just use the $24 number for silver, okay? That's the ask price. And you have a generic silver round, and you take that generic silver 1 ounce round and you go to sell it, you are going to be probably given a percentage under spot. Let's say $1 under spot, $23. And then let's say this flash crash occurs and silver goes down to $15 an ounce. Okay, let's say it doesn't crash as bad as it did in March. It doesn't go down to $12 an ounce. But let's say $15 an ounce, and you go and repurchase that generic silver round. Well, more than likely, the dealers are going to be less likely to take that big of a cut anyways, and the premiums may go up because people will be chomping at the bit to get silver and gold, trying to get a good deal on the metals. So therefore, that metal that you would have sold for $23, it may cost you $22.50 now at a $15 price because of the increased premiums. That's the kind of thing that we have to think about in the physical markets, where it may cost that or it may cost a little bit more. You just don't know. On paper, it may look great. It may look attractive, but in reality, it's a different scenario and a different situation. So whenever you see articles like this or hear me or others talk about this stuff, you have to look at your own situation and see what is about to happen. And that's why this guy's certainty is 65 to 70%. But that 30% chance is something that is something to look at too, that it may not happen. We shall see. There's a lot of different things when people make predictions like this. But I think this guy, the fact that he can quantify it with a percentage number probability statistic to his own prediction is actually, I think, quite impressive and refreshing to see from these folks that can do that. But nonetheless, for me, it doesn't change my modus operandi, my status, except for that I may stave off some purchases until such time as that were to arrive to see, especially since we have just over a month before the election. So I may hold off. Of course, don't have a lot of dry powder to make a purchase right now anyways. But if the moment is right, the prices go low, and the premiums aren't too bad, it may be worth a shot. We'll see. I'll see how it plays out. But very interesting news of the day. Post your thoughts in the comment section below. I want to extend a multitude of gratitude to you all for taking the time to watch, and also press that thumbs up button that's there as if it was there to push, and it is. So I definitely appreciate that. And extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate. That's right, that's a second call to action to hit that blue thumbs up button. Share. That's the first time I'm asking you to do that in this video, but that does help too. Share this thing all around social media platforms, Reddit, Pinterest. I don't know if you can share it on Pinterest. Share it in Reddit, whatever forum. You can share it on Facebook. You can share it on the Twitter. You can share it on the Snapchat. You can share it on the TikTok. You can share it on the dark web. You can share it on the light web. You can share it in the evening. You can share it with Sunny. And then subscribe.